Good morning, everyone. Can you hear me? Is my audio clear? Okay, thank you. So, welcome everyone to lecture number 2 of corporate valuation. Around couple of weeks back, we had started this chapter of corporate valuation, and in corporate valuation, we had done a module called as Introduction and General Questions. What is corporate valuation all about? It was about an acquiring company and the target company, where from the acquiring company's point of view, we have to value the target company. Now, valuing target company means basically wanting to know how much maximum we are ready to pay. You remember this? How much maximum I am willing to pay for that kind of valuation means that only, how much I am ready to max pay today. But whose POV are we studying? We are studying from the POV of acquiring company, valuing a target company. Now, there are various models of valuing a company, but the most common model is the discounted cash flow model, where we take future cash inflows and we discount them to find present value of future cash inflows, and that is the basic model, mostly widely used. Then there is something called as an earnings capitalization model. Earnings capitalization model means instead of discounting future cash flows, we discount future earnings. Earnings means profits, net profits. Note the only difference is in future cash flow discounting, we are discounting cash profits. Here we are discounting net profits. Like the difference must be the depreciation and all that, you're understanding. So, net profits or earnings, if these you take and then you discount to find the value, that is called as earnings capitalization model. Then there is one model called as NAV model. NAV means simply take its book value of assets minus book value of liabilities, normal calculation. So, like that, various models are there. That's what we studied in the first module. We did a couple of questions also on it. Then we went on to second module. Now, second module, is it fair value of business? Please check. Module 2. Okay. Okay, done everyone, ready? So, so there was this fair value of business. What is fair value of business? Fair value of business means both acquiring company and target company will sit together. Acquiring company will say, see, valuation according to me is this of you according to this particular technique of valuation, like DCF or NAV, whatever. They will do one valuation model. Target company will say, no, ille. My valuation technique is different. and they will say, no, my valuation is this. So then can I say, if the valuation method changes, then of course the valuation will change. Fair value, what does fair value do? It says, okay, don't fight. We will take average of both values. Are you able to understand? We'll take average of both values. Coalition government, like that. You understand? So you also little bit you take, you also little bit take, like that. Somewhere in between. Fair value of business. Understood till here? Now I would request you to, in fair value we have done question number 2. Please check. Okay, take your time, read question 2 and its solution. Krishna, you got a rank in Inter-CA. Yesterday in Mumbai, all big branches, big posters have been put up. Your photo is there. I said, where have I seen this student? Then I remembered you are in online batch. Congratulations. Huge posters are put here. First read the whole question, then you see the solution. Pushpak, All done? You understood how we used to do this? Value as per one model, value as per another model, take average. Everyone clear? Okay. Then we went on to question number 5, which got stuck midway in our last season. So now in season 3, episode 1, we will continue where we left last time. Okay. So those who are watching the recorded lecture, they should skip intro and directly start from here. So now in this question 5, okay, please read the question. We will have to go through it again. Read it carefully. Question 5. You all were having FR last 2 weeks, and audit has started. Audit already. Audit. When is audit starting? Achha, there is no date. Okay. I guess only third point was left for us to discuss. Go through it. Okay, so what are they saying? H Limited, that is the acquiring company, agrees to take over business of B Limited, that is the target company, effective 1st April 2012. Summarized balance sheets of H and B are given below. So all this is given. Next, H Limited proposes to buy out B, and the following information is provided to you as a part of the scheme of buying. So all this data is given, and then they said you are required to arrive at the value of shares of both H and B. Okay, so now ideally you should have been valuing only the target company shares, but here you are asked to value the shares of both acquiring and target under NAV method. NAV. Now NAV method calculation will be what? Assets minus liabilities. Everybody clear? And the whole divided by number of equity shares. Now for number of equity shares, I hope you realize you will be doing 350 divided by 100 for H and 6.5 divided by 10 for B. Everybody clear? This will give you number of shares. In the balance sheet there are no liabilities seen, so only the assets will be taken as the net assets. Everyone clear? And but for company H, there is a contingent liability of 300 crore of balance sheet liability, so that liability has been considered. Everybody clear? Check your NAV calculations of both, please. Tell me if you have any doubts. We had done that last time. NAV calculations, please. Done? NAV only, just check NAV. Done? Okay. So, can I say via the NAV method, we understood that H Limited has a value per share of 285.71 and B Limited has a value per share of 48.46. These two numbers you have in your notebooks. Okay. Next, they are saying, okay, now you value according to earnings capitalization method. Okay, earnings capitalization method means you take the future earnings and you discount them. Everybody clear? You take the future earnings and you discount them. Now, your future earnings has been given in point number 1. They are saying the post-tax maintainable profits now of H and B are 300 crore and 10 crore. So, they are saying that H Limited, if it continues now from here, individually will be able to generate a profit of 300 crore per annum. 300 crore per annum. For eternity? How do I calculate present value of it? Can I say I will simply take 300 crore and I will divide by 8%. Everyone understands, no? There is it is like D1 upon KE. There is no minus G now because there is no growth rate given in the profits. So 300 divided by 8 will give you the total present value of all future earnings. Like that 10 crore divided by 8 will give you total present value of future earnings for the target company. And that valuation, children, you should divide by number of equity shares. You will get the value per share. Am I making sense? All understood this? Check your notebooks, please. This point is there. Point number B. Point number 2. Done? And then these points that I have cancelled in the textbook means you did not cancel it. It was simply useless. See, weighted average, they are basically just trying to tell you that, you know what, H Limited, how did we know that it will give 300 crores in future? Because we saw its last 4-year profits and we calculated a weighted average of those profits, and by those weighted average we came to know that it will give 300. Can I say it is useless now? How you calculate? Everybody clear? It is of no use. You are telling me now it's going to give me 300 crore every year in future. Okay, take it and go ahead. Everybody clear? Hence I did not give importance. Okay. So this students was exactly, you have both numbers now with you. For H Limited, we get the valuation as 3750 crore. So value per share came to 1071.43. B Limited, I guess, considering my notes, you only have done on your own and you have got something like 192.31. Everyone done? So students, this is where we had parted ways last time. This is where the court gave your legal custody to somebody else. Now the court has ruled in my favor again. So for some days you will be with me. Then again, let's see. Okay. So B Limited 192.31, till here we have reached. Now moving on to point number 3. Okay. Now they are asking, what is the exchange ratio of shares of H Limited to be issued to the shareholders of B Limited on a fair value basis? You will not understand what they are asking. It will take some time. Please pay attention. First, we need to understand fair value basis. Fair value, we have been talking since long. Now, can I say as far as H, let's talk only about H Limited. H Limited has two values. As per the NAV, it has 285.71 and it has, as per ECM, 1071.43. Everybody clear? Same company has got two values. Same goes for B Limited also. There are two values. Fair value, what does it say? Fair value says two values illa. One value which will be average of the both. I hope you are able to understand. Hello. It will be average of both. So tell me, give me on chat box, what is the fair value per share of H Limited? Come on. fair value per share of H Limited. Only H, huh? Don't check B. Yeah, 678.57. Everybody got this? 678.57. So average, how did you do? Can I say it was 285.71 plus 1071.43, correct? And the whole divided by 2. I hope you are able to understand. Done? That is the fair value of H. Like that there will be fair value of B. But there is one problem. There is one problem. The problem is the fair value that just now you all took, no, is the simple average fair value. Everybody listening? Simple average fair value. Now read point number 4. They are saying H to issue shares to B in terms of exchange ratio. Okay, all that is okay. But for fair value, what are they saying? Please consider weights of 1 and 3 for the value of shares arrived on NAV and ECM respectively. Oh, that means now for fair value, you are not being allowed to take a simple average like how you took just now and got 678. I hope you are understanding. You will have to do weighted average. Now how to do weighted average? Let's understand. So I am writing here point number 3. In that I'll write calculation of fair value per share, and for that I'll first write H Limited. Now, valuation model. There are two valuation models. One was the NAV model, one was the ECM model. Now, what is the value per share that we got in the NAV and in the ECM? In the ECM, can I say we got value for H as 1071.43. This is what we got in ECM. And in NAV, we got 285.71. Correct? We got 285.71. Everyone's story clear till here? Now, they are saying you take weights of 1 and 3 for NAV and ECM. Okay, so for NAV you take weight of 1, for ECM you take weight of 3. So total of the weights here is 4. Everyone listening? Now how to calculate weighted average? You should do value into weights. Everybody listening? Value into weights, and then whatever total you will get here, no, that total you have to divide by 4. Everybody clear? Total you have to divide by 4 to get the weighted average. This is one way of doing it. Or some people are not comfortable with this, then what they should do? They should say, okay, they can make one more column of weights where they can say, okay, 1 divided by 4 weight is 0.25, 3 divided by 4 weight is 0.75, and this total of weights is 1, and then you do value into these weights, and this is directly the answer. Are you all able to understand? You don't need to divide by 4 or anything. This is like your WACC model. You are understanding how you used to do in inter-CA. Clear? So here, because they gave you weights which don't total to 1, generally weight should total to 1. So the weights don't total to 1, then we converted it. You are understanding now? We converted the weights into the ones like we like it, and then we did it. If you don't want to convert, no problem. Directly take these weights and multiply. You are understanding? And but then final answer you divide by 4. Whatever you are comfortable. Everyone clear? So students, I am waiting. Please complete the fair value per share of H Limited and B Limited both. So for H Limited you got 875 and for B Limited you got 156.35. I'll wait, don't worry. Are we ready? Ready? Can we start please? Okay. Now 156.35 or 42, what is the answer? 35 is right? Okay. Sandeep, some calculation mistake, just check. Any rounding off you have to do in weights or it is proper weights? Proper weight, these only weights, na? 1.25 and 0.75 or 1 and 3. So then some printing mistake, I'm sorry, calculation mistake must be there. Okay. Anyways, so now I will go ahead. In Chennai, when is the voting dates? tomorrow across Tamil Nadu, Coimbatore, etc. Everything is tomorrow only. Okay. Some of you from Coimbatore also, no? Coimbatore students also there, no? Here. And Karnataka is not tomorrow, no? Karnataka is when? Okay, May 7th. All right. So tomorrow is basically the first day of voting in India. It's starting with Tamil Nadu. Okay. You all are going now for voting. You all have your voter ID and all that. No, you should vote. Huh? You all, I think many of you. Last time also I told you, please vote. Okay. All right. So now I have to tell you something about the next chapter which is going to come, the name of which is mergers and acquisitions. Okay. I have to tell you something about this chapter. 2 days back I got one message from some student who had purchased my online product. And in the message that student wrote, sir, in the chapter of mergers and accusations, mergers and I said not accusation, it is acquisitions. There are full spelling mistake. It is not accusations, it is God, thank God, instead of mergers, she did not write murders. Murders and acquisitions. Anyways, so now, in that, no, okay, see, there is one acquiring company and there is target company, okay. Both of them decide that the purchase consideration will be discharged in the form of shares and not in the form of cash. Everybody clear? Now, A Limited, let's say number of equity shares are 1 lakh. T Limited, number of equity shares are, let's say, 80,000. Ready? Now, tell me on chat box that if A has to acquire T, A has to acquire T, A has to pay PC, na? Now, when A has to pay purchase consideration, A is saying, I will give you purchase consideration by giving you shares. I will issue shares to you. Okay? How many shares should A issue? Tell me on chat box. If A has to acquire T, then A should issue how many shares? T. So this what I am showing in front of you is what is the pre-merger data. You understand, no? Pre-merger T is having 80,000 shares. Pre-merger A is having 1 lakh shares. Now T will the T's entire ownership A will take over, but for that A will have to issue shares to the existing shareholders of T. Everybody clear, na? A will have to issue shares to the existing shareholders of T. My question is, A will have to issue how many shares? Final CA, come on. How many shares should A issue to take over T? Your whole existence depends on all these questions. Accounting. So, the answer is information is not available. The answer is it depends on the ratio. It depends on the share exchange ratio, like many of you have correctly pointed out. It can't be 1 lakh. It can't, see, 1 lakh out of question. It can't be 80,000 also, because you cannot say that, sir, they are having 80,000, no, you should give 80,000 now, why you are doing cheating, give no 80,000, no, then, But you have to first ask yourself, is the exchange ratio 1:1? If it is 1:1, then I'll give 80,000. You're understanding? But it all, so then can I say it all depends on the share exchange ratio? Now the question arises, share exchange ratio depends on what? You understood, na? On what does the share exchange ratio depend? So students, share exchange ratio could depend on many things that we will discuss in mergers and acquisitions chapter. But here, let's say that both parties decide that let the share exchange ratio be determined on the basis of our current market price. Are you there? Let our current market price be the deciding factor for deciding how many shares are to be issued. So, considering market prices, A is saying my one share is worth 100, T is saying my one share is worth 50. Can I therefore say that the share exchange ratio will be, for buying every one share of T, A will issue half of its own shares, not two, half. Correct, na? A will issue half of its own share. Why will A issue two, na? A is twice, na? Everybody clear? Hello. You're following now what I'm saying? Okay. So, if A is going to issue half of its shares, total shares that A will issue will, can I say, be 40,000? Because for every one share of T, A is going to issue half shares. So, for 80,000 shares, can I say A will issue 40,000 shares? Everybody clear? Now, hello, all following now? Okay. In mergers and acquisitions chapter, there is one formula that comes, okay? The formula that comes is share exchange ratio based on MPS equal to, see, read the language, share exchange ratio but which is based on MPS equal to MPS of target upon MPS of acquiring. Now, MPS of target is 50, MPS of acquiring is 100. Can I say the share exchange ratio will be 0.5:1? Everybody, are you all able to understand? 0.5:1. Understood till here? Now, exactly in this question of corporate valuation, they are saying that the exchange ratio is to be based on not market price but on the basis of fair value, which means how will the formula change? SCR based on fair value per share, can I say, will be fair value per share of target upon fair value per share of acquiring instead of market price per share. Everybody, are you all getting it? All sure? So, we have got, okay, I'll remove all this, not required. Okay. So, we already have the fair value per share of both the companies. So, fair value per share of target is 156.35. So, I will put 156.35 here. Fair value per share of acquiring is 875. I will put 875 here. And get me the answer, no, please. 156.35 divided by 875. (0.1786:1). Everybody clear? 0.1786:1, which means for every one share of target, acquiring will issue 0.1786 shares. 0.1787, okay, sorry, 0.1787 shares. Can I say therefore, how many number of shares does target company have? Can I say target company has 0.65 crore, which means 65 lakh shares. So, can I therefore say that H Limited will issue 65 lakh into 0.1787. You understood what I just now did? I am saying for their one share, I will give my 0.1787. So they are not having one share, they are having 65 lakh shares. So for 65 lakh shares, how many shares should I issue? Yeah, it will be 11 lakh 61,550 shares. All clear? Following? So this, students, is the question point number 3. They are asking you what is the exchange ratio of the shares H should issue to shareholders of B on not market price basis but on fair value basis. Understood, na? That is the whole thing. Taking into consideration the weights mentioned in point 4 above. That is the whole thing. All done. So you all have completed everything till here. Now just complete these 2 points and the question is over. SER is share exchange ratio. Are you done? Okay. So with that we finish fair value of business module. Now we will go to the next module. The name of the next module, students, is so what we will do is, today is what, Friday or Thursday? Thursday today. Today is Thursday. So today and tomorrow, or maybe today and half of tomorrow, we will be doing one module only, and the name of that module is economic value added, EVA. And please note, in ICAI module, 50% of questions, 50 or 45% like that, of questions of this chapter belongs to this one module only. That is EVA. You're understood? You're understanding? And but it is simple, nothing great, but many questions, and I have put all those questions in your book. Everything is there. Okay. So in the notebooks, please write down module number what now? 3. Write down module 3, economic value added, bracket EVA. Economic value added, bracket EVA. Write down EVA is a technique for evaluating financial health of a company. EVA is a technique for evaluating financial health of a company. Now I am giving you EVA formula. EVA is equal to EBIT 1 minus T minus total capital employed into WACC. Are we ready? Okay. Now keep your pens down. Let's understand this. Okay. See. Let's say there is a company. Total capital employed is, let's say, 10 lakhs. In that, equity raised is 7 lakhs. And 10% debt raised is 3 lakhs. KE is, let's say, 12%. Tax rate is, let's say, 30%. And EBIT is, let's say, 1,80,000, or maybe, okay, let's take EBIT as 2 lakhs. Okay, EBIT is 2 lakhs. Everyone ready? And they will ask you to calculate EVA. Everyone clear? They will ask you to calculate EVA. Now there are 3 steps of calculating EVA. Step 1. Calculation of NOPAT. What is NOPAT? We have heard NPAT. What is NOPAT? Net operating profit after tax. Everybody clear? NOP. Now see, NOP in ratio analysis you must have studied is nothing but EBIT. Okay, NOP, net operating profit, is EBIT. There is an operations end. And after tax means, can I say, you will have to do into 1 minus T. Everybody clear? That's why it is called as NOPAT. It is not NPAT, it is NOPAT. Okay, EBIT 1 minus T. So can I say EBIT here is 2 lakhs. 1 minus 0.3, that is basically 70%. This is 1,40,000. Everybody clear till here? 1,40,000. Story done. Now, students, we now go to step number 2. Step 2 is calculation of something called as capital charge. Now listen. In capital charge, it is TC. Now what is TCE? TCE is total capital employed. Total capital employed, do you realize, is the total capital you have raised both from debt and equity. Total that you have raised, can I say, is rupees 10 lakh. So I will write total capital employed as 10 lakh. Okay. Then we go to inter CA and we say calculation of WACC. Okay. Now for WACC, what all you will require? Can I say we will require value of equity? Can I say value of equity is 7 lakhs? Value of debt is 3 lakhs. KE given to you in the question is 12%. Can you tell me on chat box how much is KD? KD. KE I have given 12. How much is KD? Cost of debt. The answer is 7%. Everybody clear? The answer is 7%. Interest rate into 1 minus t. Everybody clear? Interest rate into 1 minus t. So 10% into 1 minus 0. You are understanding? What has happened to you? You are understanding now? Okay. So I'll write here KD is equal to 10% bracket 1 minus 0.3, which is equal to 7%. And then we will do our calculation. Source, amount, cost, weights, cost into weights, value of equity, value of debt, and then this is basically your total capital employed. This is 7 lakhs, this is 3 lakhs, and total comes to 10 lakhs. KE is given to you as 12%, KD 7%, weights 1, 0.7.3. You are understanding what I am doing now? 12 into 0.7, 8.4, no, not 8.4, 12. What is 12 into 0.7? 8.4 only, no? Okay. 12 into 0.7, 8.4. 7 into 0.3, 2.1. So totals to 10.5. Everyone clear? Totals to 10.5. So can I say your capital charge? Capital charge formula is total capital employed into WACC. Total capital employed is 10 lakh. WACC is 10.5%. This is what? 1 lakh 5,000. Someone just confirm this. Is it 1 lakh 5,000? Okay. So this is 1 lakh 5,000. Now, step 1 we calculated something called as NOPAT. Step 2 we calculated capital charge. And can I say step 3 will be to finally use this formula and calculate WACC. I am sorry, to calculate EVA. Everyone clear? We'll calculate EVA now. You have everything, no? So can I say step 3? Step 3, calculation of EVA. EVA is equal to EBIT 1 minus T minus TCE into WACC. EBIT into 1 minus T we already have is 1,40,000. So 1,40,000 minus, and to TCE into WACC as you can see is 1,05,000. So can I say the EVA comes to rupees 35,000. Everybody clear? Now you are supposed to write this down. As you are writing, you have to think, how is this EVA a technique for valuing financial health? What is the logic of all this? You have to think as you are writing. After that I will explain. You understood? How to do, you understood, na? Very simple. How to do? EBIT 1 minus T, total capital employed into WACC, difference, that's it. But then what could be the logic of it? Think. Everyone please start. And now you start writing first, don't waste time. Done. Okay. Yes, Rajarshi, correct answer. What is the logic? I'll tell. Logic is very simple. See, boys, you all are equity shareholders, girls, you all are debenture holders, I am the company. You both, can I say, gave me TCE, total capital employed, you both gave me, no? And can I say, on boys, you want KE, girls, you want KD. But for me, can I say I have to pay WACC, no, total, everybody clear? Your required rate of return is a pressure point for me. So can I say what you need is my cost, na, cost of capital, everybody clear? It is my cost of capital. So can I say TCE into WACC, can I say is the charge on capital, everybody clear? Capital charge, cost of capital is something I have to pay. Now, am I earning more than what I have to pay? If yes, my health is good. Everybody, are you able to understand? Am I earning more? So yes, I am earning more, sir. I am earning EBIT. EBIT is, can I say, 1,40,000 for me post-tax. And therefore, can I say, I am generating wealth for the company worth 35,000. This 35,000, can I say, is wealth generation for the company only, no? Because investors are getting satisfied. After satisfying investors, I hope you are understanding. Costs are already gone, all that variable cost, fixed cost, everything done. After that, investors also satisfied. After that also, if 35,000 is left, that is called as the economic value added. Everyone clear till here? That is the concept. You have any doubts? Please ask. I have one. But if you have, you ask. Otherwise, I will ask and then I will answer. Okay, I will ask. Okay, I'll start then. Ready? So, I have a doubt. The doubt is about the EBIT 1 minus T. What doubt I have about EBIT 1 minus T? Can I say here we are taxing EBIT? Everybody clear? Here we are taxing EBIT. Can I say this formula is ignoring the tax that can be saved by interest? Come on everyone, it is ignoring the tax saved by interest. Did understand? Do you understand it? You don't get tax EBIT, no, you tax EBT. Hello, tax rate is applied on EBT, you don't tax EBIT. Correct? And because of that, okay, I want to ask you, if you tax EBT, then can I say after taxing EBT, what you get is, can I say, NPAT? What you get is NPAT. Do you agree? I want to ask you, what is wrong in taking NPAT here? I am not asking you what is right in this. I am asking you what is wrong in taking NPAT. Think, if I take NPAT here, what is wrong? Yes. Do you depreciation? No. Don't go anywhere. Listen. Do you understand that if I take NPAT, then that NPAT cannot be used to satisfy everyone's requirement? No, NPAT is a profit which is after payment of interest. Can I say in this capital charge, even debenture holders requirements are there? So if I want to satisfy debenture holders requirement and equity shareholders requirement, first point, do you realize that the profit that I should see should be before interest? Are you able to understand till here? Everyone clear? It should be before interest. But can I say that taxation is not going to help you satisfy your investors? You agree with that also? Taxation will not help you. Are you understanding? Because tax will not be given to neither debt nor equity. So what is the middle way that this formula is taken? It has taken a before interest profit and then multiplied by 1 minus t. You understood? It has to be before interest. Why it has to be before interest? You all understood? Correct? And why it has to be after tax? You understood? Because tax, the tax amount will go to government. No, it will not go to these people. Everybody clear? So can I say you want before interest but after tax? Understood? But before interest means you can't take EBIT because EBIT is before tax also. Sir, we want after tax. No, let's take NPAT. No, you can't take NPAT because it is after interest. You need a middle ground. Everybody clear? You need a middle ground. It is that is why they have done EBIT before tax and then multiplied by 1 minus t. Everybody clear till here? Okay. Now, second point I want to tell you. Some students, they then go ahead and tell their teachers that if you at all want before tax, if you at all want before interest and after tax, then sir, ideally you should not do like this. You should first calculate NPAT and then add back interest. Understood what I am saying? You should first calculate NPAT and then add back interest. By this what will happen, sir? The taxation saved by interest will also be taken into consideration, because when you are calculating NPAT, you must have calculated the tax rate on EBT, no, properly. Not EBIT, on EBT. Interest must have been deducted, then tax must have been deducted. And then to do before interest, you add back interest, big deal. Now, all those who have studied inter-CA properly, this was the logic used by ICAI only in a formula called as debt service coverage ratio. There was one formula, very stupid looking formula, very irritating. Many professors don't teach also. I also don't teach because it is never asked. But in module, there is one formula called as debt service coverage ratio. If someone individually comes and asks, I explain. Debt service coverage ratio, this was NPAT plus interest plus depreciations plus amortizations, the whole upon interest plus installment. Like irritating formula was there. So that could have been used. Correct? This makes more sense. No, I hope you are understanding what I am saying. Acha, by the way, I also want you to understand NPAT plus interest you can do, or you can also do EBIT minus tax. Tax, not rate, tax amount. You are understanding? That means not EBIT, and then what you should do is subtract the tax amount, where the tax amount is EBT into the tax rate. You are understanding, no? EBT into tax rate. Proper. Both will give same answer only. NPAT plus interest also will give same answer. If you want proof, no. EBIT minus interest will give EBT minus tax at the rate 30% will give NPAT. Okay. So 100 minus 20 will give 80. 80 into 30% is what? 24, and this is 56, correct? So can you see NPAT is the proper profit after proper tax. You want before interest, no? So add back interest. So 56 plus 20, can I say 76 should have been the correct number? Or I am saying EBIT minus tax. So can you see EBIT minus tax? EBIT minus tax 24 will also give you same number, right? 76. Everybody clear? So these two methods, can I say, look better rather than doing something like EBIT 1 minus t. Because EBIT 1 minus t, what you are doing? You are doing 100 into 1 minus 0.3 and you are taking 70, which means you are saying that the tax you are paying is 30. I hope you are getting it. According to this, you can see the tax you are paying is 30. But in reality, the tax you are paying is 24. Hey, hello, you are understanding, no, what I am saying? There is a 6 rupees tax that you are saving on 20 rupees interest, not 20 into 30%, 6 rupees tax you are saving. That, can I say, has been ignored in this formula. I hope you got it now. It has been ignored in the formula. Hey, all clear, no? So then when students ask, what do teachers reply then? What to say? Any ideas of what to say? Students, EVA is a copyrighted registered formula. No, it is not ICAI. It is built by, it is made by some person, and he went and took a copyright on it. So if you have taken a copyright on it and you are using these three letters EVA, then you have no option but to use this formula. Are you all understanding? Hello? Even if you see in ICAI module, no, they will use this registered or copyrighted, that sign they will put upstairs. They are saying we are not taking responsibility of the formula. It is a copyrighted formula. Take it and go ahead. Everyone clear? Now can I say something? Now something special from my side, which nobody knows. This formula is right. No mistake. Beautifully made. Sir, but tax, everything is taken into consideration. Sir, what you are saying, sir? Here, how is everything taken into consideration? You are applying tax rate on EBIT. No, actually tax rate should be applied on EBT. Something, sir, basically, can I say the tax saved by interest has been ignored, no? Tax saved by interest has, others correct, very good. Tax saved by interest has been ignored, no? I am giving you all 1 minute. Think. It has not been ignored. Areva, you are understanding? Very nice. Students, do you realize it has been taken into consideration in WACC? See, listen. What is your problem? Your problem is, sir, we did not take the tax saved by interest. My question to you is, if you take tax saved by interest, listen carefully, if you take tax saved by interest, then do you realize that this number that you see here, look at the screen, this number that you see here should slightly increase, because if I take the tax saved by interest, I will be paying less tax. If I am paying less tax because of interest, can I say the final profit should slightly increase by that much amount? Everyone clear? That increase is not shown here, but it has been adjusted here. How, sir? By reducing the cost. I hope you are understanding. By reducing the cost, because actually if you think, within this TCE there are two parts, equity and debt. Within WACC there are two parts, KE and KD. In that, think about debt and KD. You are saying that you have to pay debt into KD, but you also know you have to not pay debt into KD. What you have to pay is debt into the interest rate. I hope you are understanding. So the actual cost is debt into interest rate, but you are reducing the interest rate by the tax amount. Everybody clear? And you are saying, no, I have to pay only debt into KD. Everyone, are you able to understand? And therefore, can I say, instead of increasing this number here, you are reducing this number here. Everybody clear? Answer will be same only, no? Everyone clear? I don't understand how people don't understand this simple thing. They go around telling students that this is copyrighted formula, that is what, take it and go ahead. But that is wrong explanation. Of course, copyright is there, but that doesn't mean this formula lacks logic. It is perfectly logical. Everyone clear? I will want to just share with you something. Just see the screen. You'll love this. Everyone, you all have written this in the notebooks already? You have written, no? Okay. Now see what I am doing. Everyone see the screen. Ready? Alternate calculation of EVA. But you can't call it as EVA now because I am doing something else only. Everybody clear, no? EVA, if you have to use the words EVA, it has to have that copyrighted formula. Otherwise, they will put case. So, I will write EV. Understood? Okay, ready? So, alternate calculation. See. Everyone ready? So, I am writing here income statement, particulars, amount. Okay, let's restart. What is EBIT given in the question? Okay, I will take this now. I will take this and I will paste it here. Okay. Ready? You are able to see? Okay. So, let's start. What is EBIT? EBIT is rupees 2 lakhs. Now, let's go inter-CA route. Ready everyone? Let's do inter-CA route. EBIT minus interest. Interest, can I say, will be 3 lakh into 10%. I hope you are able to see. 30,000 rupees will be interest. So, 30,000 goes away. EBT 1 lakh 70,000 EBT minus tax at the rate 30. I am now calculating tax normally like how we have been doing since childhood. So tax of 30%, can I say, will be applied on 1 lakh 70,000. What, 51,000 na tax? Okay, 51,000 tax, and that will give you NPAT 1,19,000. Story clear till here? Any doubts? Okay. Now, let's talk about debt. Everyone ready? Debt, can I say, is 3 lakh at the rate 10%. Can I say cost of debt is 30,000. I hope you are understanding. Cost of debt is 30,000. Already paid in above calculation. Check please. In the above calculation I already paid, na? So by the time I have reached NPAT, debt cost already taken care. Everybody clear, na? I hope you are understanding. Debt cost already taken care. Okay, let's talk about equity. Can I say equity has given 7 lakh? At the rate 12%. Do you agree? At the rate 12. They are saying we want 12%. Can I say cost of equity will be 7 lakh into 12% is what? 84, na? 84,000. 84,000. Hello. Not paid in above calculation. Do you agree with me? Everyone done? Which means it has to be paid from NPAT. You are following? Therefore, after deducting equity's required return, final profit left with company will be, students, can I say we have got NPAT of 1,19,000. Everybody clear? We got NPAT of 1,19,000. From this, can I say I have to give 84,000? Everybody clear now? From this, I have to give 84,000. Can you please tell me how much is left? 35,000. Everybody clear? What is left is 35,000. Anyone's requirement is left from this, or everything is satisfied? All satisfied? Acha, any cheating I did in calculation of tax? Proper tax I have calculated. Hello. Then this should be EVA, no? I hope you are understanding. Is it? Oh yes. You're getting it? This is EVA. You like this explanation, no? Simple. It is, so it sounds, so you have to solve it like this only, but in the back of the mind you should not think that, oh, copyrighted formula, that is why 1 minus t, take it and go ahead. No, not like that. It has logic. Everybody clear? It has logic. So you want to write this alternate explanation, alternate calculation, okay? Write it down, but don't do in the exam, huh? Okay. Thank you. Thank you. All done? Are we ready for sums? Okay, so we will now do sums. Lots and lots of sums. Only sums today. Question number 17. Question 17. Take your time, read the question. Ready? A very manageable question, nothing great. See what they are saying. The following information is given for 3 companies that are identical except for capital structure. Orange, grape and apple. Wow, 3 companies are there. Of that, apple only became very big. No? Anyways, orange, grape and apple. Now, first they are saying total invested capital. Hey, can I say total invested capital means T series, sorry, TCE. Everybody clear? Total capital employed. Everyone following till here? Next, hey, debt to assets ratio. Meaning, if your total capital is 1, debt is 0.8, 0.5 and 0.2. Can I say in our language, this is weight of debt. Come on, everyone clear? This is the weight of debt. So can I say 0.2 must be the weight of equity, 0.5 must be the weight of equity and 0.8 must be the weight of equity in the 3 cases. Okay. Shares outstanding are number of equity shares. Hey, what do you think they mean by pre-tax cost of debt? Pre-tax cost of debt is interest rate or KD? Pre-tax cost of debt is interest rate or KD? Put on chat box. Yes, it is the interest rate. Everyone clear? It is the interest rate because KD is post tax. No, everybody clear? KD is after tax. Cost of equity is KE. And for the last one, finally they wrote the word which we understand, that is EBIT. Everybody clear? So all this info is given. The tax rate is uniform, 35% in all cases. Point number 1, compute WACC for each company. I think very simple. So what we will do is write down question number 17. Point number 1, calculation of WACC. WACC is equal to weight of debt into KD plus weight of equity into KE. Like that is okay, or you want table? This is okay, na? Whatever is less troublesome. Don't disturb us. We are already disturbed. Hashtag articles. During my time, no, one joke had come. We used to do 3.5 years articleship. You are having 2 years, no? We used to have 3.5. And then it became 3. So I remember how angry I was. Why you are making it 3? We did 3.5. now see what has happened. They have run into 2. So one joke had come that that 2 professionals die at the same time after committing a lot of sins on planet Earth. One chartered accountant and one doctor. So they go to God, and then God tells chartered accountant and doctor, both of your sin account is almost same, which means it is around 100 years of hell that I will be punishing both of you with. So doctor, you go for 100 years, chartered accountant, you go for 97 years. So doctor says, this is cheating. Why 9? If both of our sin is same, then he or she should also have 100 years no, of hell. So God says, no, 3 years already done. This joke hit so hard, no? Oh God. I still remember when I saw it first time, I was laughing so badly because we were in articles. Don't tell your office all this, huh? Okay. Anyways, so moving on. So WACC is equal to weight of debt. My God, I'm not able to see only. Okay. WACC is equal to weight of debt into KD plus weight of equity into KE. Okay. All right. So let us now first talk about orange. Okay. For orange, WACC will be. Now weight of debt for orange, they have given to you weight of debt as 0.8. So see how I am presenting it. Just wait. 0.8 into. Now for KD, I will do 16% bracket 1 minus 0.35. You are understanding? So I will write here 16% bracket 1 minus 0.35 plus. Now for weight of equity, see how I am doing. I am doing 1 minus 0.8. Are you able to understand? 1 minus 0.8 into KE given to you is 26%. Okay, so this is 26. So this is 0.8 into, okay, what is 16 minus 35% or 16 into 0.65? 10.4 plus 0.2 into 26. Final answer comes to 13.52%. Okay, please complete grape and orange also. Start. 11.225. Correct? Okay, I'll wait. I don't know. Just you let me know once you get grape. The grape is 15.225. Okay. $17.95. All done? Whack is done, whack. Okay, so now that your whack is done, I'll now go to point number 2. In point number 2, what are they saying? Compute the EVA. Oh, for each company. So see what I'm doing here. Point number 2. I will say calculation of EVA. Now, what is the formula of EVA? It is EBIT 1 minus T minus TCE into WACC. The question has given you EBIT, the question has given you tax rate, the question has given you total capital employed. The question did not give you WACC, but we calculated WACC. I think one liner answer, na? Everybody clear? So get me for the 3 please, orange, grape and apple. All done. So you have got 2730 1025 and what, negative 1700, negative 1700. Please check these numbers. Some people got OG right, but A was wrong. Just check this. Today participant count is slightly more, 5-6 extra. After a long time FM is starting. Then when it continues for a long time, then again gone. All done? Okay, so Apple negative 1700. Can we go ahead? Okay, so point number 3, they are asking you, based on EVA, which company would be considered for best investment? Can I say based on in EVA, we should go for Orange. Everyone clear now? Since its EVA is highest. Just give me 1 minute, 1 minute. Just see this. Just want to check if this question is there in study module. See, study module question number 1 is, I guess, what we did as our first question in this chapter. The first question we did is this only. One was market cap valuation and one was discounted cash flow valuation, the range of value. Question 2 also we did. Eagle Limited, I told you, very important question, many times frequently asked question, ECM model, this also we have done. Third, fourth, this fourth question also we did, check. This is basically the one which we did today. The question which took 3 weeks to complete, that question. So much discussion we did, 3 weeks it went on. This is question number 4, sorry. Then question 5 also we did, check. I think question 5 is the fair value of business question, no? The first one which you all read on your own. Done. 6 is pending, 7 is pending, 8 is pending, 9 pending, 10 pending, 11, 12. Got it. Can you see this? This is our question which we are doing right now, 12th. So, okay. Point number 1, check your answers, 13.52, 15.225 and 17.95. Telling. Point 2, EVA 2730, 1025, negative 1700. Telling. Point number 3, we should select Orange since its EVA is highest. Everybody clear? They have given one more line, that is WACC is lowest. That also they have given, check. But that is not important. More important is EVA should be highest. They have said, based on EVA you take a decision. Point 3 clear, everybody? You can copy it from here only. Point number 3. Start please. All done? Point 3. Okay. Now, fourth point. They are saying if the PE ratio, is 11x, 11x means 11 times, what is the price for the share? Now, since childhood, you know, if they are asking you price MPS, and they have given to you PE, then the route that they want you to take is EPS into PE. Do you understand this? Sure. You know, na, EPS into PE will give MPS. From where will we get EPS? EBIT is given, no. You make an income statement, particulars, orange, grape, apple, start with EBIT, minus interest, EBT, minus tax, NPAT, divide by number of shares will give EPS, into 11, that is PE, will give you MPS. I think nothing from my side. Again, interest here, this is. Everyone clear? Capital structure chapter, you remember this? Start with EBIT and go down till MPS like that. So, write down point number 4, calculation of MPS. Point number 4, calculation of MPS. And next line, write down MPS is equal to EPS into PE. MPS equal to EPS into PE. And now make the income statement and start, please. All done? Okay, so just check your answers. 14.3, 15.95 and 15.73. Got this? Last question, they are asking you calculate the estimated market capitalization. Hey, what is the meaning of market capitalization? Market capitalization means market cap. Market cap means number of equity shares into MPS. Everybody clear? And I hope you understand, you have the number of shares, no? NOES is given, simply multiply by the market price per share and your point number 5 will be done. Very simple, nothing great. All done? Okay. So with that we finish question number 17. Now please come to question number 7. Question number 7. Please read it carefully. Read it. So, with the help of the following information of Jatayu Limited, compute the EVA. Now, can I say equity given, reserves given, correct? This and debentures given. Students, please understand, this qualifies as equity. Look at the screen. This qualifies as equity and this qualifies as debt. Everyone clear? And the total becomes TCE. Everybody clear? Total is total capital employed. This is KE. Financial leverage is given. This can give you KD. Everybody clear? No? This can give you KD. Can you tell me what is not available from the point of view of calculating EVA? If I have to calculate EVA, what is not there? Everything is there for calculating EVA except EBIT. Very good. EBIT. Thank you. EBIT is not there. Any ideas how to get EBIT? They have given to you financial leverage. Now, very good. So, financial leverage, can I say formula is EBIT upon EBT. EBIT upon EBT. So, 1.5 is equal to EBIT upon EBT. But I don't have EBT also, sir. What to do? Very simple. Can I say instead of EBT, you should write EBIT minus interest. I hope you are able to understand. Instead of EBT, you should write EBIT minus interest. Interest is available, no? 400 into 10%. And if interest is available, financial leverage is available, can I say we can find EBIT, and from there everything will open up. You want to try? Okay, I'll give you start. Question number 7. Write down calculation of EBIT. FL is equal to EBIT upon EBT. And take it over from here. All the best. Get me EVA. Final answer. Can I show you the solution? Little concerned, everyone is getting different answers. One is getting 154 lakh, one is getting 7.07, two people are getting 14, one is getting 33.6. Wow, diversity. You want 1 minute more? You want to just check your answers? Maybe just check. Okay, check your answers. Oh yes, ICS got 14 lakhs. Please check. Take your time. You got EBIT as 120 lakhs. Oh, till here if it is right, then what is the problem? Everything else is normal. Check, check, check. So EBIT 120 lakh. Below that you please check. You converted the KD from 10% to no what to 7%, no? KD is 7, no? I hope you did not take 10. And KE is 14. And the weight of equity will be 3 by 7 and weight of debt will be 4 by 7. Is this correct? Then everything should be right only. WACC you are getting 10% everyone. That check please. WACC. Weights got interchanged. That mistake could happen. Here weight of equity is less than weight of data. Weight of equity is 3 by 7. Weight of debt is 4 by 7. I hope you are able to find the error. Got it? No? Sure? Didn't calculate no pat. Okay. Acha, directly took EBIT only. Okay. If you directly take EBIT, then problem. See, small looking formula. Correct, but little alert. All done. Can I goes the heads? In formula I took plus instead of minus. Wow. What unique mistakes. Okay, so we are done with question number, what was this? 7. Now come to question number 8. Herbal Gyan. Are we done? So they are saying Herbal Gyan is a small but profitable producer of beauty cosmetics using the plant aloe vera. Irrelevant line, huh? As irrelevant as your feelings for IPL matches, like that. Okay, next. This is not a high-tech business, but Herbal's earnings have averaged around 12 lakh after tax. Students, this is basically your NOPAT. You have no other option. This is your NOPAT. I hope you are understanding. Because if you see the whole question, nothing else has been given about the income. So this is your NOPAT. And this NOPAT you have earned is largely on the strength of its patented beauty cream for removing the pimples. What all I have to go through, huh? Anyways, moving on. Next, the patent has 8 years to run and Herbal has been offered 40 lakhs for the patent rights. Okay, so basically the valuation of the patent is 40 lakhs. Herbal's assets include 20 lakh of working capital and 80 lakh of property, plant and equipment. Basically, can I say 100 lakhs is the total capital employed? Everyone clear? I mean, total assets means total capital employed. Everybody clear, na? But however, the patent is not shown in Herbal's books as of now. So the problem, do you realize, is 40 lakh rupees of patents are not seen in your assets, but it has the impact on your NOPAT. I hope you are understanding. So therefore, do you realize that we will have to change the asset value? No, everyone clear? We will have to include. Hello, that it is because of this patent that you are earning so much money. Then can I say in the capital employed, the value of the patent should also be there, na, when you are calculating EVA. Okay. Herbal's WACC is 15%. Students, 2 minutes job. Look at me. Can I say 12 lakh is EBIT into 1 minus T? Game over. Minus total capital employed into WACC we have to do. Total capital employed, I am going to take 140 lakhs. You understood how? 20 plus 80 is already seen, plus 40. And WACC is 15%. One line answer. I hope you are understanding. One line answer to Herbal Gyan question. All clear? NOPAT given, see NOPAT is given and WACC is given. What is left? Then only for total capital employed, 140 lakh you had to add. Question over. Everyone following? So, let me see if Herbal Gyan is there. Question 15. Okay. Check ICAI's solution once. Big solution they have done. Check please. 100% clear, nothing great in the question. Okay, please copy it from here only if you want. EVA na, they have written one formula. You write as per how we have been writing. Like they have written no income earned. You write EBIT 1 minus T, so that when you are reading you should have uniformity. Are you done? Adiroshi, yes, next plan is that only. Okay, done everybody. We go ahead. Huh? So we are done with question number, what was this? 8 na? Question 8 done. So now I would request you all to come to question 20. Question number 20. Please read the question carefully. All done? Take your time. Ready? Okay. Constant engineering has developed a high-tech product which has reduced carbon emission from the burning of fossil fuel. This line is as irrelevant as the pimples line earlier. You're understanding now? Forget it. Let's go ahead. The product is in high demand. Okay. The product has been patented and has a market value of 100 crore. Okay. Which has not been recorded in the books. You understood why in my sequence this question came after 8th question immediately. It's all like that same kind of question. The net worth of constant engineering is 200 crore. Wait students, this is like the equity component. This is including reserves. Net worth is ESC plus reserves, everything included. Debt component is 400. Now I hope you realize that when the patent also is recognized, students, can I say capital employed will go from 600 to 700 crore. Hope you are able to understand. Can you tell me the 100 crore which you will be adding, you will add to equity or you will add to debt? Understood question? See, this is the balance sheet. In balance sheet, equity is 200 and debt is 400 and so assets are 600. Now we realize that assets are not 600, assets are 700. Everybody clear? So if assets are 700 because of the inclusion of the patent, then on the balance sheet liability side also this 100 should be added. Now you will add to whom? Of course equity, owners. Debenture holders don't own the patents. Everybody clear? Can I go ahead please? You will add it to equity, okay? Anyways, so moving on. The product generates a revenue of 84 crores. Now students, if you read the question ahead, they have not given anything about EBIT. They have not given anything about tax. They have not given anything about variable cost, fixed cost, nothing. So can I say from sales of 84 crore, there is no road to EBIT. I hope you are able to understand. Costs are not given only. And from EBIT, even if I would have got EBIT, tax rate is not given to do EBIT 1 minus T. So what do you think ICA has done? This is NOPAT. Don't question. I hope you are understanding. Understood? Not take it and go ahead. No, information is not given. Now what to do? Okay. Any idea why all this is given? Rate on 365-day government bond is 10% per annum. This is your risk-free rate. Market generates a return of 12% per annum. This is your market return. And okay, can you tell me what does this mean? The stock of the company moves in tandem with the market. Why is this line given? This is given, yeah, very good. That means beta is 1. You understand? Beta is 1, which means if market moves by 10%, this company also moves by 10% only. See, if beta would have been 2 times, no? Then if market moves by 10%, this company would have reacted by 20%. Everyone clear? Don't worry, in portfolio management, detail we will be discussing. Don't worry right now. But just understand that beta is a degree of reaction of the company to a change in market. And here they are saying it moves in tandem with the market, means beta is 1. So there was a formula in inter-CA, KE is equal to risk-free rate plus our market return minus risk-free rate into beta. CAPM formula, you know this? To put numbers and get KE. Correct? Now students, please understand small areas. It is I am giving it to you as a test, but there is something that I want you to understand. Question number 20. Students, can I say EBIT 1 minus T, you are going to take as 84 crore only and go ahead. This is sorted? Great. Then total capital employed, can I say, will be 200 crore plus 400 crore plus 100 crore, which is equal to 700 crore. I hope you are able to understand. 700 crore. And out of 700 crore, we will say the equity component is 300 crore and the debt component is 400 crore. So if you think about your EVA, your EBIT 1 minus T is set, Your TCE is set. Now the only thing left is WACC. For WACC, weights of debt and equity are also set. You only need KE and KD. Everybody clear? You need KE and KD. So for KE, this formula is there. IRF plus RM minus IRF into beta. IRF is given to you in the question as 10%. Market return is 12%. So 10 plus 12 minus 10 into 1, and I'll just write here beta is 1 since stock moves in tandem with market, and I hope the formula the KE therefore comes to 12%. Everybody clear? Now students, KE done. Now only thing left is KD. Hey, search the question. Do you have any information on KD? No, na? Then what? We will take 10%. Everybody clear? The risk-free rate is there, no? We will take that. So assumed debt to be risk-free. So if debt is risk-free, then whatever risk-free return I am getting is the interest rate. No, I hope you are able to understand is the tax rate, is the KD basically. All done. Is there any tax rate given in the question? No, na? Ignore. Everybody clear? Forget it. Can we go ahead? Forget it. We go ahead. So this is done. So now we do calculation of WACC. WACC will be weight of debt into KD plus weight of equity into KE. Weight of debt, can I say, will be 400 divided by 700. KD is 10. Weight of equity will be 300 divided by 700 and KE is 12. Get me this number. WACC. %10.86%. Okay, 10 point. Just check the number once. 4 by 7 into 10 M plus 3 by 7 into 12 M plus MRC. 10.86%. Okay. Can I say EVA is equal to EBIT 1 minus T minus TCE into WACC. EBIT 1 minus T, that 84 crore only we will continue. There is no information. TCE as we know is 700 crore and the WACC is 10.86%. Can you get me EVA please? $7.98 crore. Let's see. Understood the question? No, I solved it actually. Understood everything? Simple. ICAI is getting, oh my god, 8.05. Answer not telling. Why do you think answer is not telling? Any scope idea? Hey, hold on. 10.86 we took. Students, I am going to continue with 10.86 only, but just recalculate EVA if the WACC is 10.85 please. Just recalculate if WACC is 10.85%. So basically everything is same. Hello, everyone clear? No? Just small difference here is rounding off. Everyone clear? They have taken 10.85. We'll go ahead. They have taken 10.85. You know why? Because no, they rounded off this also and this also. You understood? We did everything one shot and rounded off last. Got it now? That is the only thing different. Otherwise everything is okay. So we'll copy it from here please. Thank you. Question number, what is this? 20. Is it done? Okay. So with that we complete question number what was this? 20. Correct? So come to question number 15. 1 5. Question number 15. It looks big, huh? But it is not. See, they are saying RST Limited's current financial year's income statement reported net income after tax as 25 lakh and all data is given, students, which means this I cannot consider as NOPAT. Huh? This is NPAT proper. Are you all there? This is NPAT. We will have to go reverse and calculate. Okay, so they are saying that tax rate given to you is 30%. Following is the capital structure: 40 lakh debt and 125 lakh equity. Following data is given to estimate cost of equity. Beta is 1.36, risk free rate is 8.5, and I would like to tell you this 9% is not RM, huh? It is a market risk premium. Market risk premium means basically it is RM minus IRF. Everybody clear? It is market return minus the interest rate, which is risk free. And they are now asking you to calculate WACC. Students, wait. I am giving you a task, full blown task. Listen carefully. What is the question number 15? No? Okay. Do exactly as I ask you to. Listen. First calculate KE, then calculate KD, then calculate WACC. Are you all there? KE, KD, WACC. And then they are asking you to calculate EVA. Now students, for point number 2, I would be wanting you to first calculate EBIT by going reverse from NPAT. I hope you are listening. Calculate EBIT by going reverse from NPAT income. You have done the inter-CI, all this type of time pass. Take NPAT and go reverse and get EBIT. Then you should do EBIT 1 minus T. I hope you are able to understand. Then you should do EBIT 1 minus T. And then you should be able to calculate EVA. So 6 steps. You want to try this? As and when you are getting answer, keep telling me. Start. What is the WACC you all are getting? People are getting different numbers. I don't know why. 40, 125. So it is 40 by 165 into 7.7 plus 125 by 165 into 20.74. Is this correct? And then if you solve this, you should get how much? 17.58, huh? 17.58%. If you go reverse, let me know what EBIT you are getting. See, ICA is getting something like 40 lakh 11,429, something like that. 40 lakh 11,429. This is their WACC. $40,11,429. You got now how to do it? Reverse. Now that you have EBIT 40,11,429, now calculate EBIT 1 minus T. Institute has got what? 28 lakh 8,000. You got this number 28 lakh 8,000. That is EBIT 1 minus T. And then final EVA, please. Negative answer 92,700. All done. Negative 92,700. Today's lecture clear. Okay. Thank you very much. Bye bye. Take care. See you tomorrow.